I'm doing everything within my power by executive orders to bring down the price.
Most notably, of course, a very aggressive, historically significant release of barrels of oil from the strategic reserve.
That's going to dictate a lower inflation rate as we go through into the second half of the year.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance, the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Here's what's coming up on today's program. U.S. inflation hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. And in the U.K., the inflation print hits a 30-year high of 7%. The Bank of England is on course to raise interest rates for a fourth time in May. Joe Biden escalates his condemnation of Russia's invasion of Ukraine. The U.S. president accuses Vladimir Putin of genocide. And stay with Bloomberg Surveillance Early Edition as Finland and Sweden drop plans to join NATO. This hour, we're going to be speaking to the man who oversaw Estonia's accession to the alliance, former President Thomas Hendrik Ilves. Send in your questions, IB plus TV Go. Well, let's check in on your markets on this Wednesday morning. We are seeing European stocks basically flat this morning. A lot of churn underneath the surface. We're seeing things like energy materials. Those are doing better. I have Brent crude on the board down 0.1%. A lot happening in oil. We're also getting some breaking lines from the IEA. They've cut their oil demand forecast because China has reimposed lockdowns. So that means lower demand. This question is, as we see the IEA members putting up output, does it necessarily need to happen if we are heading towards a situation where the Chinese economy is slowing? And of course, we will be speaking to the IEA shortly as well. So here's where you're looking at on your UK 10-year yield, just to run you through the other assets, up about 8 basis points. That comes after that hot inflation reading, 7% in the UK. And the yen, 20-year low versus the dollar. This is a currency that continues to get pummeled. It is that yield differential. Here's your map in Europe. Here's where some of the churn underneath the surface. You can see it. France outperforming, some solid earnings from LVMH, lifting a lot of the luxury good stocks in that country. I was saying before, energy materials, those are doing well today. So we're looking at the FTSE 100, also up 0.1%. Elsewhere, it's a little bit of a soggy day. The DAX is down. FTSE mid barely changed. IBEX barely changed as well. Of course, sort of underlying this entire picture are the U.S. inflation readings we got yesterday. It was the hottest since December 1981, and that reinforced the need for the Fed to follow through on its aggressive rate hike plan. We're joined now by Gurpreet Gill, macro strategist for the fixed income team at Goldman Sachs Asset Management. Gurpreet, great to have you on the program this morning. So yes, it's just one figure yesterday, but does your forecast change? Does your outlook for where inflation goes from here alter at all, given the reading we had yesterday?
Hi, good morning. Well, it's great to be with you. I would say the outlook for us and also for the Fed is not going to change by one particular inflation print. We did see a moderation in used car prices, which has been particularly volatile, and it was the first inflation miss relative to consensus expectations since last August, and the first moderation in the monthly pace in 6 months. And so the market did take some comfort from that. But I would say if you look at measures like the Cleveland Fed's trimmed mean measure, which omits any outsized price moves in either direction, that was still firm. You still see firmness in shelter inflation and still firmness in core services. And it's that is really going to drive the Fed outlook from here. And importantly, the Fed is going to be more focused on the speed at which inflation is not only moderating, but moderating back towards target. There's 4 key things that we monitor in terms of the outlook from here. The first is the trimmed mean measures, so what I mentioned, those measures of inflation that are taking out any outsized moves. The second is shelter inflation. That has been firm due to a healthy labor market and tight inventories. But looking ahead, an increase in apartment supply, any moderation in wages could help temper inflation there. The third most important factor is what's happening with wages and the labor market. There we do have a very tight labour market. There's no question about it. You are seeing income growth across all income quartiles. But surveys do suggest that wage growth is going to moderate from a healthy 6% back towards 4%. You could also see an increase in labour supply, which could help temper wage growth. And then finally, inflation expectations. And these matter insofar that they are forming wage demands. And their inflation expectations are still elevated, but they could start to moderate as you see commodity prices moderate and as the Fed cycle gains traction.
Gurpreet, to that point of inflation expectations, I mean, survey after survey we see have inflation expectations extremely high and just global outlook for the economy very low. We had the NFIB survey for the U.S. yesterday. Prices record high, outlook for the economy a record low. To what degree is this a self-fulfilling prophecy where this gloom about the economy will lead to some serious issues heading forward?
Yeah, I think when it comes to the formation of inflation expectations, there are some behavioral factors at play, something called frequency bias. We are shaped and informed by what we are spending money on the most, and so food and fuel. And those prices tend to be driven by what's happening in global developments. We have started to see commodity prices moderate. At the same time, the Fed hiking cycle could begin to influence interest rates for mortgages and the housing sector. That too could help temper inflation expectations, which is important for the broader inflation environment.
All right, Gurpreet, stick with us. Much more to cover. That's Gurpreet Gill from Goldman Sachs Asset Management. Now let's get to the Bloomberg First Word News. With that is Leanne Gerrans. Good morning, Leanne.
Good morning, Danny, and thank you. President Vladimir Putin says peace talks with Ukraine are at a dead end and vowed to continue Russia's invasion. There has been no word of progress for days in video-linked talks after Ukraine accused Moscow of carrying out war crimes, including killing unarmed civilians. Putin called the claims fake and said the war in Ukraine is going according to plan. Meanwhile, President Joe Biden has for the first time accused Russia of committing genocide in Ukraine, significantly escalating his condemnation of President Vladimir Putin's invasion. This comes as the U.S. is said to be readying further military assistance worth $750 million for Kyiv. Ukraine has repeatedly asked allies for more weapons as it braces for a new offensive by Russian forces in the east of the country. Here in the UK, Boris Johnson has become the first serving Prime Minister to be sanctioned for breaking the law after the police fined him for attending a rule-breaking gathering during lockdown. The Chancellor Rishi Sunak was also found to have broken the rules in attending the event at Downing Street in June 2020. Opposition Labour Party leader Keir Starmer said they had repeatedly lied to the British public and is calling on them to quit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Coming up on the program, the IEA cuts its oil demand forecast as China reimposes lockdowns. We're going to be speaking to the IEA's head of oil markets, Toril Bosoni. Send in your questions, IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. The International Energy Agency has lowered its forecast for oil demand. It says measures to curb the spread of COVID in China are a major reason for the move. Now, for the rest of the year, it sees the world using 260,000 barrels a day less than it had previously forecast last month. It also sees a sharp drop in Russian oil supplies, and this, of course, as Vitol, the world's top independent oil trader, says it plans to stop trading Russian crude and products by the end of the year. We're joined now by Toril Bosoni, head of the IEA's oil market division. Toril, thanks so much for joining us this morning. So a downward revision in global oil demand. This, of course, comes off the back of oil supply rising from non-OPEC countries. As we look forward in the year with the risk of recession, is there a risk that the market flips from undersupply to oversupply, again, given economic slowdown?
Yes, good morning. No, of course, this month we lowered our forecast for world oil demand by 260,000 barrels a day, and this follows mostly the lockdowns in China. But already in last month's report, we made a much bigger revision to our oil demand outlook stemming from higher prices, lower economic growth. And we're seeing now that economic forecasters continue to downgrade their outlook for the world economy. And obviously, this will have an impact on oil demand. But oil demand is still recovering from COVID, so we are expecting growth of nearly 2 million barrels a day this year. It's slower than what we saw last year, but the aviation sector is recovering. There's pent-up demand, so we are expecting growth, but obviously a downside risk if the economic outlook deteriorates further.
Right. And of course, feeding into this, you have the input now, the prospect, or rather the reality of war. Now, among this, as I was mentioning before, Vitol said that it plans to stop trading Russian origin crude once its contract weighs out. And given the self-sanctioning we are seeing towards Russian crude, do you expect Russia to cut its own output, and if so, how much?
Thank you. No, so our forecast, I mean, there's a lot of uncertainty about the Russian production outlook, but we're seeing not just Vitol, but major oil companies, especially in Europe, stepping away from Russian oil, stopping buying altogether, and Total, BP, Shell, many other companies and traders. So our expectation is that Russian oil supply could fall by 3 million barrels a day starting from May. We're already seeing output falling nearly 1.3 million barrels a day from the March average. Domestic demand in Russia is always also falling. The sanctions, the economic outlook has been downgraded. So refineries in Russia are lowering runs. They have difficulties placing some of the products. So we're already seeing Russian output falling. How far it will fall will depend on the international community's reaction, sanctions, possible embargoes expanding, and just the reluctance of buyers internationally to take the Russian crude. Our forecast is that we could lose up to 3 million barrels a day.
Of course, this comes off the back of the IEA members releasing more oil, the U.S. really leading that drive as well. Does that mean that there's less of an impetus now for OPEC Plus to increase their output?
So we're seeing OPEC Plus scheduled to continue to increase production through the end of the year, and then we're factoring this into our balances. So now, while our oil market balance look more or less in supply, lower demand, higher supply, and with the additional barrels from SPR releases from IEA member countries and from the US in particular, the market does look more balanced. But we have to remember that oil demand continues to grow this year, and we're going into the year, even before the Russian war started, with record low inventories. OECD inventories are more than 300 million barrels lower than they were the 5-year average. So the market is very tight. And with all the uncertainty on both the demand and supply side, the SPR releases go some way to create comfort for market. But there is a need for OPEC Plus to continue to increase production as demand grows through the rest of the year.
Toril, is there a concern then, because, this has been a call from the IEA to OPEC, and OPEC, of course, has disagreed with those calls, has resisted those calls. Are you troubled by any sort of hint here of a breakdown between relations of the IEA and OPEC?
No. The way we put forward our market balances, what we've seen, what we pointed to is that demand has surpassed supply for the best part of 18 months. Inventories have continued to fall. So we have seen an imbalance in the market. Of course, inventories were high after the COVID lockdowns in 2020. So we're just pointing to the fact that there was a need for more supply to the market. There has been. Inventories are low. That's creating a lot of volatility. Volatility is not good for markets. Higher prices is feeding into inflation. That's not good for consumers nor producers. And I think we will continue to put forward our markets and our call. But as I said, the market does look more balanced for 2022 as we see it now.
Okay, Toril, I'm afraid we're going to have to leave it there. Thanks so much for joining. That's Toril Bosoni, head of the IEA's oil market division. Now, coming up on Surveillance, Britain is in the teeth of an inflationary surge. Latest CPI data showing that the squeeze on consumer spending power is set to intensify. That next, this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, annual inflation in the UK surged to 7% last month. That's a fresh 30-year high that threatens to worsen a cost of living crisis. Joining us now is Bloomberg's economics reporter, Lizzie Burden. Lizzie, so break down the numbers. What's driving this inflation, and does the peak look like it's in sight?
Well, interestingly, this was the 6th straight month that it's beaten economists' forecasts, and it's a rise that's across the board. It's 75% of items in the inflation basket went up in price compared to 25% this time last year. So it's not just a big rise, it's a broad one. It's not just food and fuel prices, as you'd expect with the war in Ukraine. It's also clothing, footwear, furniture, household goods, all the things that the poorest households need to buy. So it deepens the cost of living crisis, potentially could derail the economic recovery, and adds to the political nightmare for the government. The worst thing, though, is the peak is yet to come. Before this print, the Bank of England had said that inflation could spike at 8% in April because of the rise in the energy price cap. That could be higher now. And the bank had said that it could hit double digits later this year because the energy price cap could go up again in October.
So what does this mean for the BOE then?
Well, yesterday's jobs data had added to the ammunition for a fourth back-to-back rate rise in May. The question I'll be asking economists today is, does this open the door to a 50 basis point rise in May? Bloomberg Economics says beyond the May hike, the likelihood is the bank will pause the tightening because inflation will get so high that it could weigh on demand, slow down the recovery, and inflation tames itself. But there is the risk that the labour market gets so tight, inflation expectations are derailed, and the bank has to continue hiking beyond May, even if it's a slower pace.
Lizzie, thank you very much. That's UK economy reporter Lizzie Burden breaking down the numbers for us. And Gurpreet Gill from Goldman Sachs Asset Management is still with us. Gurpreet, I'm going to steal one of Lizzie's questions because I think it's really pertinent right now. Does this open the door to a 50 basis point hike from the BOE?
Yeah, it's a great question. That is not our base case at this juncture. The Bank of England is actually more advanced in its hiking cycle than other central banks. It kickstarted that cycle back in December with a 15 basis points rate hike. It's since done 2 25 basis points rate hikes. So we don't think it's going to follow the RBNZ that we saw in New Zealand this morning in delivering a 50 basis points hike. We also expect the Bank of Canada to deliver a 50 basis points hike later today. And of course, the Fed at its next meeting and perhaps the meeting after that. By contrast, we think in the UK, we will see another 25 basis points rate hike at the early May meeting. After that, we, like your Bloomberg economists, were expecting the Bank of England to engage in a pause in its hiking cycle as that inflation squeeze started to take hold. But if we don't see any turn in the labour market data, which so far is remaining resilient, then we do think you could see another 25 basis points rate hike at the Bank of England's June meeting.
Gurpreet, to what degree are you preparing for stagflation in the UK?
Yeah, it's a good question. We don't see it at the moment in the data in that growth is holding up. But that being said, we've had limited hard economic data since the onset of the war in Ukraine. The soft data, so survey data, the manufacturing PMIs, those have started to moderate. When you look under the hood at the components, the new orders components, which are a better leading economic gauge, those have started to moderate. So stagflation is surely a risk in the UK and also to some extent in the Europe relative to the US.
I do think this question of what the ECB does amid most central banks, perhaps save for Japan, starting to hike, what they do in this process. I was talking to Carson Bresky of ING earlier, who said that the ECB needs to wait, given the impact of war is really unknown at this point. Briefly here, Gurpreet, would you agree with that sentiment?
Yeah, it's a good point. There is greater uncertainty in Europe, and the ECB is faced with this difficult balance at the moment of intensifying medium-term inflation risks and the downside growth risks. At this Thursday's meeting, we think the ECB is going to be more focused on the intensifying inflation risks because that's where there is greater uncertainty at the moment. On the growth front, growth is expected to weaken. You are seeing that in the leading economic indicators, like I mentioned, the new orders components, the manufacturing PMI sentiment has come off quite sharply. But at the same time, a lot of those indicators pertain to the manufacturing side of the economy. The labour market is still healthy and the services sector is still strong. So we do think the ECB will normalise policy this year.
All right, Gurpreet, thanks so much. That's Gurpreet Gill, macro strategist at the fixed income team at Goldman Sachs Asset Management. Coming up, President Biden accuses Putin of committing genocide in Ukraine, a major escalation of condemnation of Russia's invasion. That's next. This is Bloomberg. U.S. inflation hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. In the U.K., the inflation print hits a 30-year high of 7%. The Bank of England is on course to raise interest rates for a fourth time in May. Joe Biden escalates his condemnation of Russia's invasion of Ukraine. The U.S. president accuses Vladimir Putin of genocide. And stay with Bloomberg Surveillance Early Edition. As Sweden and Finland drop plans to join NATO this hour, we're going to be speaking to the man who oversaw Estonia's accession to the alliance. That's former President Thomas Hendrik Ilves. Send in your questions. IB plus TV Go. Well, good morning and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Let's get your check on markets with European markets up and open for about an hour and a half. We're nearly flat, not a ton of action, at least on the headline level, on the benchmark level. There's been a lot of back and forth this week, a lot of concerns, be it emanating from the U.S., be it higher yields. But we did get that red-hot UK inflation number. We've seen yields move higher, 8 basis points on your gilt 10-year yield, selling off with the prospect of the BOE giving them ammunition to be really aggressive when it comes to taming this inflation. We're also looking at Brent crude. This slipped into positive territory, up 0.4% after the IEA's latest release when they lowered their demand forecast given the COVID lockdowns in China. We were just speaking to the IEA earlier, Toril Bosoni over there saying that the market looks more balanced. Finally, the yen, 20-year low versus the U.S. dollar. That's all about the yield differential. Kyoto reporting that the Japan finance minister saying that the sudden FX moves have become problematic. So at the moment, it's just jawboning. We'll see whether there's more intervention in this market. So to the U.S., where markets are continuing to digest that U.S. inflation data and what it means for Fed policy. President Joe Biden says he's doing everything he can to lower consumer prices.
But even as we work with Congress, I'm not going to wait to take action to help American families. I'm doing everything within my power by executive orders to bring down the price and address the Putin price hike.
We're joined now by Andrew Balls, CIO for Global Fixed Income at PIMCO. Andrew, I'm going to take us across the world and look at what RBNZ did today. So they hiked by 50 basis points. Most economists didn't see it coming. But I got to say, Andrew, the market reaction was one that was a bit more muted than I had originally expected. A lot of the moves that occurred, they came back in. So I wonder to what degree this is a market that's all hawked up, that is prepared for hawkish central banks, even if many economists aren't.
I think that's right. And if you look at what markets are pricing in, I mean, markets are pricing in, very significant tightening cycles. In the case of the RBNZ, as they said, kind of a stitch in time saves 9. If they do more now, that may mean that they do less later on. So, they went 50 basis points. They may well go 50 basis points at the next meeting to get ahead of this. But it doesn't necessarily mean that you should move up your your higher end, terminal rate expectations.
Is there a degree to which then, Andrew, that the market has just gone too far?
Well, I think it depends where you look. I think in Europe, so closer to home here, the market's pricing quite a lot for the ECB. It's difficult to compare with the past cycle because we had a European sovereign crisis in the past, but the market's pricing in, pretty restrictive stance, I would say, over time for the European Central Bank. If you compare it with the US, yes, you're having some overshooting versus neutral rates, depending on your neutral rate forecast for the Fed. So some tightening there, but I think that could definitely go further in the US. And when you look at underlying inflation in Europe, the headline number is certainly high. The core inflation number is nowhere near as high as in the US. So much more of an energy story in Europe. So I think it depends where you look. I think it's plausible to think that the markets could price in more for the US over time. Europe, you've priced in a lot. For the RMBs and RMBNZ or Australia looks pretty reasonable. And then the UK is interesting because more than some of the other central banks, the Bank of England has looked at the growth implications as well as the implications for inflation coming out of the Ukraine conflict.
If I can just focus us in on the U.S. for a moment. And by the way, I've been getting a lot of flack for saying RBNZ today, so at least you're saying Zed. When you look at the U.S., Bullard wrote an opinion piece in the FT saying that it's a bit of a fantasy in current central bank policy that just getting to neutral isn't putting enough downward pressure on inflation. It's just ceasing to put upward pressure on inflation. At what point do rate rises, does the overnight benchmark borrowing cost actually start to rein in inflation?
Well, so I think that's right, that given where inflation is, given the tightness of the labor market, the Fed is going to need to slow the economy. So the Fed is going to need to go above neutral. The Fed, I think, has about 2.5% for their assumption for neutral rates. We're probably a bit below that, but it seems perfectly plausible to think that 100 basis points or so above the neutral rate would be not such a big call. And then you need to look at overall financial conditions as well. The policy rate is important, chiefly in terms of the impact on longer term rates, credit spreads, and overall financial conditions. So as I said, I think you can price in some more tightening in the US. In the funds I manage, we're positioned for that, and outright tightness. Okay. But then you do have to think, and there's a lot of tightening priced in for this year, and so you do need to look at the impact on growth further down the line. The shape of the yield curve gives you that indication as well. So it's a tricky path between the Fed doing what it needs to do and the risk of slowdown or recession risk in next year, say.
A tricky path. That is certainly probably the sentiment for literally everything happening in the world right now. Andrew, really great to have you on today. Andrew Balls, CIO for Global Fixed Income at PIMCO. Thanks so much for joining. Now, President Joe Biden has, for the first time, accused Russia of committing genocide in Ukraine. His comments mark a major escalation of his condemnation of Moscow's invasion.
I call this genocide because it becomes clearer and clearer that Putin is just trying to wipe out the idea of being between Ukraine.
At the same time, President Vladimir Putin has said peace talks with Ukraine are, quote, at a dead end, and has vowed to continue Russia's invasion.
As for the progress of the operation, I often hear questions if we can do it faster. We can. It depends on the intensity of military actions. The intensity of military actions is related to losses, unfortunately. Our goal is to achieve all objectives, minimizing losses.
Joining us for more on this is Bloomberg Senior International Affairs reporter Mark Champion. So, Mark, the president's language has changed, the U.S. president using the word genocide. What's the significance of that?
Well, it really is the last word that you can use against another country. What it really indicates, I think, is that from both sides there's a recognition that this is not going to be resolved by talks anytime soon. And as you just heard, President Putin said yesterday that the peace talks are at a dead end. And on the U.S. side, that's more or less the same recognition and an understanding that, for the immediate future, at least, this is going to be resolved on the battlefield. And so you had the U.S. Pledging another $750 million worth of weapons to Ukraine and saying that it would fast-track them, get them there as fast as possible. You have European leaders saying, similar things, not about the amounts of money, obviously, but about the need to get stuff to the front line in Donbass within the next couple of weeks. You had President Putin there talking about, the balance that he has to think about in the speed of the campaign. But it's all about resolving this on the battlefield.
Mark, there have been rumors, claims of a chemical weapons attack in Mariupol. How do we really judge these claims? What do we know about them?
Well, it's extremely difficult to confirm anything because of where it took place in Mariupol on the territory of a factory where some of the defenders have retreated to really make a last stand. And so they're obviously encircled, under fire, and it's impossible to get access to get samples, to get doctors to look at the victims and test their blood and so on to find out what was used, or indeed to just find out if anything happened, since this is a claim that's made by the soldiers there. So yes, very important if it happens, because the U.S. and other Western leaders have pledged to do something in response if chemical weapons are shown to have been used, but very difficult to prove.
Mark, thank you very much. That's Bloomberg's Mark Champion giving us the latest update on Ukraine. Coming up, Finland opens the door to a NATO application. We'll be joined by the former Estonian President Toomas Hendrik Ilves to discuss that next. Send in your questions, IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Finland is set to kick off a process that will likely lead the Nordic country applying to join NATO. The government is expected to sign off a white paper today on changes to the nation's security environment following its Russian neighbor's attack on Ukraine. We're joined now by former president of Estonia, Toomas Hendrik Ilves, who oversaw Estonia's EU and NATO accession process. Thomas, thanks so much for joining. So 100 miles, less than 100 kilometers away from Tallinn, a nation is undergoing the same process that you did back in 2004, joining NATO. Given your experience overseeing that process, what is the significance of a Finland who's a member of NATO?
Well, I mean, there are a number of massive changes underway. First of all, I mean, both Finland and Sweden have rejected NATO membership since NATO was founded in 1949. And we've seen that 6 weeks of Russian aggression has changed 3/4 of a century of security policy. Clearly what happens, if these countries join, it would mean that the entire security profile of Northern Europe changes. Right now, the three Baltic countries are, I mean, barely tied to the rest of Europe from a security point of view. You can see on the map that there is just this little stretch of land of 60 kilometers between Russia's Kaliningrad Oblast and Belarus, and we could be cut off easily. If you now look at that picture and you fill in as blue Finland and Sweden, NATO becomes, rather, the Baltic Sea becomes a NATO lake, which means that the security, the depth of security changes immensely. And so this is would be an astounding change in the security environment of Europe.
Then there's the question of the Russian response, Thomas. I was struck by a Washington Post op-ed yesterday of Michael Gearson, who served President Bush at the same time that you were leading Estonia into NATO and serving as president as well. So he wrote that the logic that led to Russian aggression in Georgia and Ukraine, aka no NATO in the Russian sphere, would almost certainly lead towards the Baltics. Is this the appropriate sentiment? Should there be fear that Russia next turns its sight on the Baltics?
No, I read the piece, and I don't quite understand the logic because unlike Ukraine and Georgia, we are in NATO. We have been there almost 20 years. There is this thing called Article 5, so that were Russia to try to do something, it would meet the full force of NATO. So I don't quite understand that. And certainly, if anything, the possible membership or the membership of Finland and Sweden would make this even more disastrous insofar for Russia, in that they would have an entire quarter of Europe that they would be engaging in, and NATO would be engaging with troops and material and air from the entire Baltic Sea space.
Does Russia then have a response? What would it be to additional members in NATO?
Well, they're in a tough position, I would say, because first of all, their entire rhetoric has been directed against the so-called new members who have been in since 1999 and 2004, saying this can't continue. And here, their own actions have precipitated a decision on the part of traditional neutral countries to join. So, and each with their own very capable military. So their response, it's hard to gauge. I mean, since the invasion of Ukraine was pretty irrational as well, but I don't really see that it's true that we are next after this. I don't follow that logic.
Yeah, there have been a lot of wrong calls made on the presumed actions of Russia heading into this invasion. I do wonder, though, one of the possible reactions, and we have seen some signs of this, is cyber attacks. Finland, for example, after it started to talk about joining NATO, they suffered some attacks on the government website. Estonia, when you were president, you also saw cyber warfare coming from Russia as well. What would you tell your peers in Finland and Sweden when it comes to cybersecurity in this era?
Well, I think they're actually quite well prepared. I would say that Finland especially is exceptionally well prepared to deal with cyber warfare. We in Estonia and Finland are among, I guess, the two strongest cyber defense powers in Europe at the moment. And so I'm not too worried about that. I'm more worried, actually, I'm less worried about NATO, which I think can handle it, than some of the developments in the European Union, which seem to be more designed to weaken cybersecurity, most importantly with some of the new legislation they've adopted. But in terms of sort of direct cyber attacks, I think it would be quite foolhardy to attack Finland. Though I mean, we saw that just the other day when President Zelensky was speaking to the Finnish parliament. The Russians did a massive cyber attack to drown him out. I mean, so we will see this kind of nuisance creating behavior quite a bit, and but getting stronger than that. Well, there will be a window of opportunity between the time that Finland applies and then becomes a full member, in which NATO Article 5 will not apply yet, but that they will be subject to all kinds of harassment.
Thomas, we're going to have to leave it there. Thanks so much for joining. Thomas Hendrik Ilves, former Estonian president. Thanks for joining us. Coming up, UK Prime Minister Boris Johnson says he's paid a fine for breaching the COVID lockdown rules. We're going to have more on that next. Plus, we'll continue the UK inflation story. This is Bloomberg.
It did not occur to me that this might have been a breach of the rules. But of course, the police have found otherwise, and I fully respect the outcome of their investigation. I've paid the fine, and I once again offer a full apology. It's my job to get on and deliver for the people of this country, and that's what I'm going to do.
UK Prime Minister Boris Johnson there, who has become the first sitting leader to be sanctioned for breaking the law. That's after police fined him for attending a rule-breaking gathering during lockdown. Joining us now is UK government reporter Alex Morales. So, Alex, I mean, does Johnson's position look to be in danger after this?
Well, if this had happened 2 months ago, you would have said almost certainly there would be a leadership challenge. The Tory party has a sort of an arrangement whereby people can submit letters. Last week, he held a sort of obscure-sounding backbench committee, but if enough letters are received, that triggers automatically a leadership challenge. And it looked like there was sort of critical mass building towards the number of letters back 2 months ago. But Johnson, in a sense, is lucky by the timing of his fine because the Tory party have reassessed their own mood and they think that Russia's invasion of Ukraine changes the situation, and that time of crisis is not a time to change your leader.
What about Chancellor of the Exchequer, Rishi Sunak? He has had his fair share of concerning headlines to many, and of course falls under this Partygate scandal as well.
Yeah, I mean, he's had a terrible week, hasn't he? We had all the revelations about his wife's tax affairs last week, that he held a US green card while he was still Chancellor, a whole lot of negative press. And then at the end of it, I think it came as a bit of a shock to a lot of Conservatives that he was fined as well as part of his the Partygate scandal. He had acknowledged already attending this particular event, which by his account was he'd shown up for a work meeting and there happened to be people celebrating the Prime Minister's birthday party. I suspect he was only there for a few minutes and it wasn't planned by his account. So I think there's a lot of shock that he was fined. There was a big story in the Times yesterday saying that he'd agonised over whether to resign. I'm told categorically that he didn't write a letter. But knowing the Chancellor and the way he is, you would imagine it will have crossed his mind to resign.
All right, Alex, thanks very much. Bringing me back to those ambushed by cake days. Exactly. Great to have you on. That's Alex Morales, our UK government reporter, giving us an update. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kailey Leinz in New York, Anna Edwards in London. Off the back of those hot inflationary readings, you continue to see bond markets selling off, stocks wobbling today. How does that continue? How does the Fed react? This is Bloomberg.
We're kind of at a weighing station in the market at this point.
I think broader picture, there's not too much that has, aggressively shifted.
A drop in inflation, a drop in crime, settling Ukraine would all make a big difference.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, April 13th. Our top stories today. Searching for the shooter. New York police name a person of interest in the subway station shooting that left almost 24 people injured. For the first time, President Biden accuses Russia of committing genocide in Ukraine. The U.S. is now preparing another massive package of military aid for Ukrainian forces. And JP Morgan kicks off earnings season for Wall Street's biggest banks. Investors will look for the impact of inflation and volatility triggered by the war in Ukraine. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Kailey, a bit of resilience in global risk assets over the past 24 hours. I imagine, though, anybody commuting at this early hour in New York in the hours ahead, their thoughts probably elsewhere this morning.
Yeah, after that incident with the subway shooting yesterday in Brooklyn, Anna, and we will have updates on that in just a moment. Let's first, though, get the update on these markets. As Anna alluded to, a bit more risk on sentiment taking hold today. You actually had the MSCI Asia Pacific Index higher after a 3-day losing streak. It was up about 0.7%. A leader within that was Japan. Japanese equities aided by a weaker Japanese yen. Actually, the Japanese yen at its weakest level against the U.S. dollar in 20 years, going all the way back to 2002. North of 126 after BOJ Governor Kuroda reiterated his commitment to easy monetary policy. But actually, even with that move, the Japanese yen isn't the weakest currency against the dollar in G10 FX today. That actually belongs to the Kiwi. The New Zealand dollar weaker by nearly a full percentage point, trading around 67 cents or so, even after the RBNZ hiked rates by 50 basis points, its biggest interest rate increase going back 22 years. Traders, though, in FX and the bond market seem to be betting that maybe the tightening won't be as aggressive from here, because you're actually seeing a bid coming into the short end of the curve in New Zealand. That 2-year yield down 14 basis points to just 3.1%, Matt.
I like the Zed. Kailey, that must be a Virginia. That must be a Virginia thing. I'm taking a look at S&P futures right now, about 2/3%. We closed the cash trade down 1/3% yesterday, so a little bit more optimism creeping into markets today. The 10-year yield rises as investors let go of that debt to 2.7595. So really a similar level to what we were looking at this time yesterday, but still relatively high, of course, the highest that we've seen since the end of 2018, beginning of 2019. Nymex Crude Wti back up over $100 at 197, even as the IEA says that the drawdown in Russian production wasn't even half as bad as they thought, as Russia finds buyers for its oil. Bitcoin up 1.6%. So maybe this is a risk-on indicator, 40,177. I know they said the same thing yesterday, but we're gaining by a little bit more today, and the correlation remains strong. Anna, what do you see in Europe?
Yeah, we see a mixed picture here in Europe, really, Matt. We have some markets outperforming because of their sectoral structure, if you like. The London market, certainly one of those. The French market also. The German market underperforms today. Let me show you what's going on energy stocks, because you see the London market is in green, and that is in part because of that strength we saw in energy prices in the last 24 hours. Today, more stable, but we're still talking about $100 on WTI, 104, 105 on Brent, and so that moves those energy stocks a little bit higher today. LVMH in the luxury sector, that is boosting what's going on in Paris, up by 0.9%, but the numbers well received by investors. The geographical spread playing to the advantage of this business, even though the concerns, of course, around war in Europe and the lockdowns, COVID-related over in China, the business in the US and in parts of Europe managing to be pretty resilient, and so that stock goes higher. This is the UK 10-year yield, and the yield is going higher, and this all connected to the inflation story globally. You've got 40-year highs on inflation in the US. We've got 30-year highs on CPI here in the UK. And that, of course, has got a lot of people thinking about what the Bank of England does next. This is the last inflation print that the Bank of England will get before it makes its next decision in the month of May. And Tesco, this is the biggest grocery retailer in the UK, gives us a really interesting indicator of how that inflation impulse is passing through the economy. They've had to put up wages. They've talked about how they might find it difficult to keep prices low, and that's what their business model relies on. And they've also said they'll take a hit to their profits as a result. Matt remembers the tagline, and that's the Tesco share price moving more than just a little, down by 5%. On the Russian asset side of things, we've got the stock market down by 0.5%. The ruble on the move, around 2.5% movement here. Interesting that President Putin was citing resilience in the ruble yesterday as a demonstration in his eyes of how the Russian economy has withstood the attacks of sanctions from the global community. And the Russian 10-year bond yield in here as well, because we are going to hear from the CDDC in the coming days. Then, Kailey, they're going to review those payments that were made in rubles last week. There were 2 of them. They were not made in dollars, but in rubles, and they're going to review whether that equates to a default, a conversation we will pick up later on in the programme with an emerging markets voice.
Absolutely, Anna. So that's one thing that we're watching today. As for what else is on the agenda in the day ahead, JP Morgan will be kicking off big bank earnings. It reports at 7 a.m. New York time. We'll also get U.S. PPI data at 8:30 a.m. Eastern. And finally, U.S. Treasury Secretary Janet Yellen will be speaking to the Atlantic Council on the future of global economy and U.S. economic leadership. Matt.
All right, now police in New York continue searching for what they call a person of interest in the shooting at the Brooklyn subway stop yesterday. 23 people were injured, 10 of them shot by a suspect who hasn't yet been apprehended. The NYPD commissioner spoke about it.
We are truly fortunate that this was not significantly worse than it is. At this time, we still do not know the suspect's motivation. Clearly, this individual boarded the train and was intent on violence.
Our own Kriti Gupta reporting live from the scene for us yesterday. She joins us now for more. And even though, Kriti, yesterday it felt like we weren't getting the information we needed quickly enough, it really was a pretty fast-moving investigation from the incident at, 8:30 a.m. yesterday to the name that they published yesterday, I think around 5:30 p.m.
Yeah, it took all day, but essentially a lot of it came from what they found at the crime scene, actually, essentially at the subway platform, which I still believe is still an active crime scene. It has not been cleared to resume service yet. And really what they found was allegedly the gunman's belongings. They found a 9mm handgun. They found 2 undetonated smoke canisters. That was some of the reports we were hearing early on in the morning. There were undetonated devices within the subway station. But also remember, he had released 2 smoke canisters already on the subway car. When the subway doors opened, the smoke kind of fled into the platform. What they did also find among really a barrage of weapons here was also 33 shells fired as well. So you said 33 rounds, of course, injuring 10 people or with a gunshot wound. Other injuries were there as well. They also found a key to a rented U-Haul van, and that's really where they found the name of this person of interest, Frank James. He is 62 years old, black male, about 5'5". It's unclear whether he is actually the shooter that they're searching for, what the connection is, but he is a person of interest, and that manhunt is still ongoing.
Well, and obviously, Kriti, this is where our attention was focused yesterday in the city of New York. In the state of New York, though, the events of yesterday really overshadowing some other events, and that was the Lieutenant Governor, Brian Benjamin, resigning after being indicted on a bribery charge. Where do we stand with that this morning?
Well, he has officially resigned, and Kathy Hochul was very vocal about, she's the governor of New York, of course. She was very vocal about saying that, we don't support these allegations. The prosecution saying that from 2019 to 2021, he was obtaining corrupt campaign donations from a real estate developer, essentially promising to use his authority as a state senator to obtain $50,000 of grant money that he later claims went to children in Harlem when it comes to school supplies. Nevertheless, that is what prosecutors are alleging. He did plead non guilty, so we don't know what the verdict is yet, but so far that does mean he's out of the campaign race.
Kriti, thank you very much. Bloomberg's Kriti Gupta with the latest on those happenings of various kinds in New York. President Joe Biden has, for the first time, accused Russia of committing genocide in Ukraine. As we get back to the geopolitics, significantly escalating his condemnation of President Vladimir Putin's invasion. This, as the United States is said to be readying further military assistance worth about $750 million for Kiev. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us now from D.C. Anne-Marie, a quite significant step up in the language being used, the non-diplomatic language being used here between, by President Biden in this case, and a step up in funding for the Ukrainians.
Yeah, really twofold yesterday coming from the White House in terms of their condemnation and also support for Ukraine. So first, let's go to that phrase, genocide. The president said this in Iowa when he was giving talks about trying to lower fuel costs that have also risen because of the war. He said your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide a half a world away. Now, this is a word his administration has not wanted to use and has refrained from using. So journalists asked following that up, Mr. President, is this what you meant? He said, yes, I called it genocide because it's become clearer and clearer that what Putin is trying to do is wipe out being Ukrainian. Now, he says he'll leave it to the lawyers internationally, but to him, That is what it looks like. And it comes as we have reporting that the United States will be having a drawdown and sending military weapons to Ukraine, $750 million worth. Now, the way they're doing it is through a drawdown where the president could just have this order to send it directly and not get congressional approval. This really speeds up the process, given it's a wartime. But we should also note this just adds to the nearly $2.5 billion of weaponry that's been sent from the United States to Ukraine.
Continuing to provide that support. Bloomberg's Anne-Marie Horton in Washington, thank you so much. Now, speaking of Russia, the International Energy Agency has lowered its forecast for oil demand. It says measures to curb the spread of COVID-19 in China are a major reason for its move. The IEA's head of the oil market division spoke with Bloomberg's Danny Berger earlier.
This follows mostly the lockdowns in China. But already in last month's report, we made a much bigger revision to our oil demand outlook stemming from higher prices, lower economic growth. And we're seeing now that economic forecasters continue to downgrade their outlook for the world economy. And obviously, this will have an impact on oil demand.
Let's get more now with Danny Berger, who conducted that interview. Danny, what else did she tell you?
Well, I think it's really fascinating just how fragile this market is, that the threat from oversupply to undersupply is very acute, depending just on, what month it is. So in terms of the China slowdown, basically I had asked her there, do we have a threat of oversupply of oil? And she said, yes, okay, there is this demand picture slowing now, but going forward, there still is this resumption to normal post-COVID. And at the same time, Russia oil supply is about to be reduced drastically. We're already seeing that process start now. So she renewed her call that OPEC needs to step up and put more oil on the market. Of course, that call has yet to be heeded by OPEC. Part of the reason also Russian oil supply coming off the market is this continuation of self-sanctioning. Now, we learned that Vital, the latest to really do this, one of the biggest merchant traders of oil, saying that it wouldn't renew any contracts with Russian suppliers. And that means by the end of the year, it will no longer be trading in Russia-originated crude and other materials. Basically, they had pre-existing contracts, so this isn't a huge change in tone for them. But it does come off the back of a Zelensky advisor writing to Vital saying, don't receive Russian oil anymore. And at the same time, this just adds to the list of various companies, various firms who are no longer operating in Russia, no longer touching Russian crude. BP, Shell, Exxon, all pulling back on their operations. So again, this self-sanctioning leading to cuts in what Russia is putting out there on the market, Matt.
Yeah, absolutely. But the cuts aren't as drastic as had been expected, right? We were looking for a 3 million barrel a day drop, and now it's been brought down to 1.5. Danny, thanks so much. Danny Berger there reporting on oil for us. Let's get to banks, because JP Morgan kicks off Wall Street earnings today for the big banks. It's followed by an avalanche tomorrow with Citi, Goldman Sachs, Morgan Stanley, and Wells Fargo all reporting at once. Plus, Bank of America comes out on Monday. Bloomberg Sonali Bassett covers Wall Street for us, and she joins us now for more on what's expected. So you're going to be a busy beaver over the next few days.
More tomorrow than today, but JP Morgan's results will be very interesting. It will be a sign of exactly how much loans are growing, and growing in the face of a potentially slowing economy. You have analysts already factoring in for potential stagflationary forces on the banks, of which JP Morgan is expected to be hurt by that the most, according to Goldman Sachs. But listen, Matt, there's so much divergence expected because of the drop-off in the trading business. Remember, JP Morgan, something interesting was that they were the biggest counterparty to the world's largest nickel producer at the center of that big nickel short squeeze. At the same time, that's on the downside. On the upside, they're a huge inflation trader as well. So there could be a lot of divergence in the numbers here, and really the comparative results will be interesting.
Charlie, we heard from the St. Louis Fed President James Bullard, who's been saying that rates need to be raised faster or policymakers will end up risking their credibility. He made these comments in the Financial Times, and they're just another sign of backing for aggressive moves to tame inflation. What do banks want to see here? Because banks for a long time have said that interest rates are low and they would benefit from rates being higher, but perhaps they don't want them to go up too quickly.
Yeah, that's exactly right. And it's not just the yields themselves. Remember, banks will benefit from higher interest rates overall, but not if it really stifles demand meaningfully for loans. This month, we do see debt underwriting come back for corporations in a very big way, but that could be front-ending what we might see in terms of rate hikes later this year. There's also the issue of the yield curve, Anna, and if the yield curve remains very flat, this could wipe out billions of dollars from the bank's net interest income collectively. Right now, there's not really an expectation that will happen, but people are certainly watching closely, and banks are telegraphing what that ultimate hit will be.
All right, Bloomberg Sonali Basak, looking forward to your reporting throughout the next couple of days. Thank you so much. Now let's take a look at some stocks moving in pre-market trading here in the U.S. We were just showing on the screen, but I'll mention for the benefit of our radio listeners that you do have shares of JP Morgan higher ahead of those results. And the Financial Select Sector Spider ETF, which basically gauges how the group as a whole will be trading in early hours, is up by about 0.7%. A stock falling lower, though, is PayPal. News breaking overnight that Walmart has poached PayPal CFO John Rainey to be Walmart's new CFO, and the stock is lower on that news, down about 1.4%. Another stock that is moving to the downside this morning is Albertsons, of course, the grocer. It reported yesterday its profit outlook for the full year disappointing, facing a lot of margin pressures due to higher food prices, due to higher labor costs, due to ongoing supply chain issues. The stock was down 8% on that yesterday. It's lower by another 3% before the bell this morning, Anna.
Kailey, just a quick word on what we're seeing coming through from Japan. We've seen real weakness in the Japanese yen of late, and that continued today, a move down of 0.6% in just today's session. That's the dollar with the yen. The Japanese Finance Minister Suzuki is speaking in Tokyo and saying that sudden FX moves are very problematic. Will they stop at this verbal intervention? Will there be any kind of intervention of another kind? We have a great voice coming up to talk about the weakness in the Japanese currency and interest rate differentials. Vasileios Gkionakis joins us as head of European FX strategy at Citi, but no doubt has some thoughts on what's going on over in Asia as well. And Bitcoin's new spiritual leader, how Jack Dorsey is setting himself up for life after Twitter. Read more on that story in today's Big Take by typing NI Big Take into your Bloomberg terminal. Plus, on the shooting in Brooklyn, we'll be speaking with New York City Mayor Eric Adams. That conversation at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg TV. Actually, it's like a triple cast, right? Because you can see us live on Bloomberg.com as well. So that's pretty awesome. I'm Matt Miller here in New York with Kailey Leinz. Anna Edwards is out in London. I'm looking at small business pessimism, and the pessimism has gotten much worse with inflation. There's also a lot of other stuff going on, of course. We just came through the pandemic. We've got a war raging in Ukraine, supply chain and chip shortages, and of course, higher and higher prices. It's probably not just small businesses. As we kick off earnings season, I want to bring in Justina Lee from Bloomberg Markets to help us understand what we should expect with all of these headwinds as companies start to report. Justina?
Right. I think what your great chart kind of shows is that people are really worried about stagflation right now. Because on one hand, we have prices going up because of supply side factors. But on the other hand, like businesses are worried about, will consumer spending be able to hold up? Will they be able to raise prices enough? And I think, that chart was about small businesses, but that really is the concern that's hanging over this earnings season right now.
Justina, good morning. And that chart was about U.S. small businesses. I wonder where the concern around stagflation really falls. Is it in the US or is it really around the Eurozone and certain Eurozone economies?
I mean, that's a great question because I think the concern is certainly much more acute for Europe right now. I mean, that's partly just because Europe is, closer to Russia, more exposed to businesses there, and also at the same time, much more reliant on Russian energy. And I think we're kind of really seeing that right now. I think I read a comment from one of our stories today about, a recession in Europe is really what people are already talking about right now.
And we'll get ready to hear from the ECB on that note tomorrow. Thanks very much to Bloomberg's Justina Lee. For more market analysis, you can check out MLIV Go. That is the function to use on your Bloomberg terminal to keep up to date with the Markets Live blog. This is Bloomberg.
Now, keeping you up to date with news from around the world, here's the first word. In China, another sign that COVID lockdowns are disrupting port operations and having an impact on spending. Imports unexpectedly fell last month and export growth slowed down. Imports declined 0.1%, the first drop since August 2020. Exports grew 14.7%, beating estimates, but still slower than the rise in the first 2 months of the year. In the UK, inflation jumped more than expected last month to a 30-year high. Consumer prices rose in March at an annual rate of 7%, and higher inflation is on the way. This month, there will be a 54% increase in the energy price cap. So what does that mean for the Bank of England, for fiscal policy, and for the British pound? We'll have that conversation coming up. Vasileios Gkionakis, Citi's head of European FX strategy, will be joining us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Police in New York are searching for what they call a person of interest in the shooting at a Brooklyn subway stop. 23 people were injured, 10 of them shot, and no suspect has been caught yet. Detectives are looking for a man who rented a U-Haul van found at the scene. For the first time, President Biden is accusing Russia of committing genocide in Ukraine. That's a significant shift from his previous position. Meanwhile, the U.S. is now preparing another massive package of military aid for Ukrainian forces. And in finance news, JP Morgan kicks off earnings season for Wall Street's biggest banks. Investors will look for the impact of inflation and volatility triggered by the war in Ukraine. The deal-making boom slowed during the first quarter. That leaves big banks set to post a slump in revenue from that particular business line. I'm Anna Edwards in London. Matt Miller and Kailey Leinz, of course, with me in New York. And Matt, what is in focus for you as we head into the start of the US day? We've had incredible US inflation and UK inflation.
Yeah, well, there's a lot going on, a lot to process, especially after yesterday's attack on the subway. But in terms of the markets, when we completely divorce ourselves from the issues here in New York City, we have a risk-on day. S&P futures are up 0.5%. The 10-year yield is rising as investors feel comfortable enough to let go of that debt. 2.7653%, so still at kind of the same levels we saw yesterday, but that's the highest since the end of 2018. Nymex Crude had bounced back a little bit. Now it's coming down, but it's over $100 for WTI. Remember, just 2 sessions ago, we were looking at a 93 handle, and Bitcoin is back up today as well, 1.5%, but it's still at a relatively low level compared to what we've seen over the last week. So 40,116. Remember, this change is from midnight tonight. Of course, Bitcoin trades 24/7 all the time. And right now, it's off a little bit from the bullish push that we'd seen over the past few sessions. Kailey, what do you see in terms of the pre-market?
Well, you're seeing that lift in Bitcoin today, and of course you're seeing a lift in technology stocks now for a second day. Relief continuing to come in to this sector in particular. The likes of Apple and Nvidia are higher in early hours. Apple up by about 0.8%. Nvidia, the chip maker, up by about 1.3%. Also higher, another group of stocks, and that would be the banks. Of course, JP Morgan going to kick off earnings season in just between an hour and an hour and a half from now. JP Morgan Chase unchanged relatively in pre-market trading, but the financial select sector SPDR, which gauges how the sector is doing as a whole in the early trade, is up about 0.7% as we all wait for those results, Anna.
Yeah, we have a little bit of downside coming through here in the European session, a bit of a move lower, I should say here. We've got the Stoxx Europe 600 down by 0.2%. Some weakness in Germany meets some resilience in the French market and in the London market. The London market helped by those, generally speaking, higher oil prices that Matt was referencing, even if they are a little bit weaker today. So some of the oil majors go higher in London. LVMH was adding a boost to the French market, although even that stock coming off a little down now by 0.3%. This is a business that's impressed investors really this morning, well, last night and this morning European time, with its resilience in terms of geography. Yes, there are questions about how the business performs in China into the future, but in the last quarter it seemed that they were quite resilient in the US and Europe, and that offset weakness over in China. The UK 10-year yield, we continue to see those yields go higher. 30-year inflation highs here in the UK. That was the way we started our morning here in the European time zone. And Tesco, the UK grocery store business, and a really interesting illustration of how difficult this inflation environment is for some businesses. They've been talking this morning about how, yes, they're putting up wages. They're going to find it difficult to keep prices low in the current environment, and that is going to be a hit to profits, and the stock down by 5%. Oh, and in fact, Matt, before I forget, let's go on and have a look at the Russian assets, which I shouldn't forget to do. We've got Russian assets, equity markets moving lower. We've got interesting focus by President Putin himself on what's going on with the ruble. He's talking about how this is a sign for him, the fact that the ruble is now not up at 150, 160, it's down at 82. He says that this is a sign of the resilience of the Russian economy, even if his own government expects a contraction of some 10% in the size of the Russian economy this year. And interesting to watch Russian government debt. Of course, we're going to get the CDD then, Matt, saying whether they think that the Russians have defaulted on their debt. We saw a couple of payments coming through in rubles and not dollars in last week's trading period. So we'll watch the CDC with interest.
So that's the Credit Default Determination Commission, is it? Something like that,
That is.
Right? All right, cool.
Yes.
Very interesting stuff. I want to focus in on the yen. Anna, you were mentioning earlier comments from the Japanese finance minister, Suzuki, who said, these extreme moves, kind of calling out comments from Trichet 20 years ago. It's the speed of the move which is concerning. He doesn't want to comment on the level of the yen, but these quick moves are something that they're definitely monitoring. As Kailey was telling us over the past few days, we've seen the yen trading at pretty much a 20-year low. Now it's actually gotten there, and we're looking at, 126 and change right now? There's a pretty sweet chart. For those of you on radio, listening on radio, we are looking at a chart that goes all the way back to the late 90s, all the way back to really the first Nirvana record, and that's the last time we saw levels like this. Vasileios Gkionakis, European head of FX strategy at Citi, joins us to talk about what this means for the Japanese economy and for, central banks on two different paths. Vasileios.
Hello, Matt. Yeah. Well, look, as far as the dollar yen is concerned, the moves that we've seen are largely being driven by U.S. yields. I mean, the correlations between dollar yen and the yield spread, which is pretty much driven by the U.S. yield, has been nearly 1 or so over the past month. Do we think dollar yen goes higher from here? I think it goes a bit higher on the back of higher U.S. yields, although I think that it has become quite a crowded trade right now. So I'm not entirely sure the risk-reward argues to initiate fresh longs here. Now, in terms of monetary policy paths, look, I think there's currently a somewhat different rhetoric coming from the BOJ and the FinMin. And I think that we're not currently at levels that we are going to prompt actual FX intervention. If history is any guide, potentially we need to gravitate 130 or plus to actually start seeing a high probability of foreign exchange intervention. But let me say this, the last time that the Japanese intervened to prop up the currency, to prop up the yen because of excessive weakness, it was more than 3 decades ago or so, if memory serves right. And it didn't actually work on its own. It had to be assisted by U.S. intervention as well.
Right, and Vasileios, does this kind of verbal intervention, then, this doesn't stand to work? I mean, what will matter is when the BOJ changes policy.
I think there is a combination of a stretched positioning and stretched moves alongside some verbal intervention, which is likely to cap or make the trajectory much flatter compared to what it was. But I don't think that it's going to have a very lasting effect, verbal intervention and so on.
OK, now some people tell me that the pros watch euro yen, which takes me nicely into a conversation around the ECB, Vasileios. Where do you expect the ECB to land its commentary this time around? Is this going to be quite a hawkish ECB, or are they going to be waiting to see just what damage is caused to the Eurozone economy by the war?
I think it's going to be quite a hawkish ECB. I think the ECB is far more concerned right now with inflation compared to concerns about growth. And the other thing, which I think the market narrative that we've had over the past 6 months or so should start shifting. Inflation now is not being driven just by supply side shocks. Inflation is also being driven by resilient demand. And resilient demand, it's just as in the Eurozone, it's globally. And don't get me wrong, there are risks. single biggest risk is China right now. But the reality of the matter is that we have very tight labor markets and we have high household savings ratios. And these because consumers were actually forced not to consume. So with inflation where it is, and going back to the starting point, we have a depo rate at minus 50 basis points. The ECB is still purchasing assets. I think that we're going to have a hawkish ECB meeting. I think Lagarde is quite likely to leave the door open to ending asset purchases at the end of June and potentially July rate hike.
Okay, and they're committed to that sequencing of asset purchase ending and then rate hikes. So, Kailey, jump in.
Well, Vasileios, while we're talking about inflation, obviously that's one equation for the ECB. Meanwhile, in the UK, 7% the print we got this morning. What's your base case for the Bank of England and therefore the pound?
Very good question. I think the BOV is, of course, likely to hike in the May meeting, but I think it's also quite likely to start taking a pause in the second half of the year. There are a number of reasons for that. First of all, we started seeing weakness in the numbers, and one can equally say that for the Eurozone, but the starting point is much different. We do have 125 basis points of a difference between the current rates between the central banks. So from that perspective, I think the market is quite aggressive in pricing in 135 to 140 basis points for this year. So I think as we go into the May meeting and potentially later, we're going to start seeing a divergence with the BOV repriced lower and other major central banks either staying where they are or potentially repriced a bit higher.
Maybe the market's with you then. 1:30 and little change is where we are on cable this morning. Vasileios, thanks so much for joining us. Vasileios Gkionakis of Citi, we thank him for his time. Coming up on the programme then, Tim Ash, BlueBay Asset Management, Senior Emerging Market Sovereign Strategist. We will ask about what's happening in Russia, about debt payments there. We'll also talk about Sri Lanka and whether we learn anything of a global nature from what is taking place in that country. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, the President of Colombia, Iván Duque. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
My team has been in touch with Mayor Adams, New York's police commissioner, and the Department of Justice and the FBI are working closely with the NYPD on the ground. We're going to continue to stay in close contact with New York authorities and as we learn more about the situation over the coming hours and days.
President Biden speaking yesterday on the Brooklyn subway shooting. And of course, that followed the president joining New York City Mayor Eric Adams earlier this year in New York to talk about getting guns off the streets, highlighting a string of violent acts that have gripped the city. Anne-Marie Horton, Bloomberg Washington correspondent, is back with us from D.C. for more. Anne-Marie, last night, Mayor Adams, Eric Adams here in New York, tried to frame this as a broader American problem, saying that this shooting is part of just a string of violent shootings, gun violence hitting cities across the U.S. So the question this morning isn't just what Eric Adams is going to do about it. What is President Biden going to do about it?
Well, this shooting comes just 2 days after the president had an event to discuss gun violence. This event, though, was talking about going against these so-called ghost guns, these kits that you can take at home and assemble a gun, and then potentially they become absolutely untraceable. And it also comes as this administration is under pressure due to what Americans think their handling on crime is. So there's really two main issues the administration is facing as they head into the midterm elections, and that is inflation and crime. And what we heard from the president this week is that they're trying to go after more on ghost guns, things they can do from the administration point. But of course, obviously, if you really want to go into legislation of guns, that is going to go to Congress. And there's obviously very different feelings about what to do with guns when you talk to Republicans and Democrats on the Hill.
Yeah, well, we've reached a point technologically where anyone with a 3D printer can build a gun at home. So that's not going to be traceable or stoppable, I think. but can be made very illegal, of course. Anne-Marie, we're going to talk with Mayor Adams later on today, and I'm very much looking forward to hearing what he has to say about that. He's sort of front and center in the fight against guns, certainly in New York City, but he's a voice, I think, that's important to hear all over the nation. Of course, President Biden has put up legislation on this issue as well. And President Biden, I notice, also accusing Vladimir Putin of genocide. Now, some people see this as a big shift in his stance, but I feel like he's already called him a war criminal and a butcher and asked for him to be put out of office. So, you know, how much different is this?
Well, it is an escalation of the tone and the rhetoric, because individuals in his administration, when you ask them, have said they haven't quite they wanted to go that far and use that term just yet. But the president had said this yesterday when he was talking about lowering fuel costs. He said your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide a half a world away. This was obviously welcomed on Twitter from President Volodymyr Zelensky of Ukraine. But it is a step up in rhetoric. I mean, just last week, Jake Sullivan said that we have not seen that level of systematic deprivation of life of the Ukrainian people to rise to the level of genocide. And now the president stands by that remarks, because reporters asked him right away, and he said, yes, I meant to say it, and this is why. And he says, of course, the international courts and the lawyers will deal with the logistics of the term, but he says, as far as I see, that is what is happening in Ukraine.
Anne-Marie, thanks very much for the update. Bloomberg's Anne-Marie Horden on all things going on in Washington. Let us stick with the international agenda, though. Timothy Ash, Senior EM Sovereign Strategist at BlueBay Asset Management, joins us. And a really good time to have you on the program then, Tim, and we'll start our conversation in emerging markets around Russia. We've seen a couple of payments then last week made in rubles where recipients were expecting to receive dollars. Of course, Russia will argue that it's not defaulting and has said it will take legal action if it's stopped from making payments by international sanctions. What are you watching for next on this particular story? I mean, whose view really matters here? Is it the CDDC? Is it ratings agencies, although they've stepped aside from Russia?
Well, S&P, I don't think have yet withdrawn their ratings. I think the other two have. We're expecting them to give a determination. Remember, the OFZ bonds that had to be paid, they were ruble bonds to be paid to foreign investors in rubles locally. About 40 days ago, there was no grace period. Amazingly, ridiculously, I think, the rating agencies gave them a 30-day free grace period. They haven't paid. They're in default. That's the fact. They haven't paid bondholders at the time required in the document. They haven't paid them in the currency as required in the document. That's a default. And you know, on external debt, it's clear. OFAC are pushing Russia into a full default unless they get out of Ukraine. And I mean, for Russia, this is going to be a devastating blow over the longer term, because it'll be very hard for them to come out of default.
Right. So I was going to ask you about the longer-term impact of this, because even before the invasion of Ukraine, even before war in Ukraine, a lot of market voices were telling me, no, look at the ruble, look at that, look at the Russian stock market. Don't worry too much about Russian debt, because you know they haven't relied on international debt markets perhaps in the way that some other economies have. And yet you think this is going to have long-term significance into the future for the Russian economy?
Look, this is a paradigm shift. You know, it's a systemic crisis in global security, in European security. You know, why Biden has called it genocide in Ukraine. I think many people agree with him there. And the response from the West has been reflective of that. I mean, these are seismic sanctions. You know, the fact that OFAC is pushing Russia into an actual default. I mean, Russia may have thought it was Fortress Russia, but when its assets are frozen, when it's forced into default, you know, that makes it very difficult for policymakers in Russia to manage through this crisis. And it's not, sorry?
No, well, I was just going to say, we still see the ruble. I'm looking at 82.50 right now, Tim. Is that a legit
This is not
quote?
A market. It's not a market.
Okay, I wonder, you know, if European governments are actually just paying Putin in the exchange rate that he determines, if that's part of it, or if market makers are just, you know, not making markets correctly.
I mean, this is not a liquid market. I mean, there are significant capital controls. I mean, try trading ruble in size. You know, almost impossible, right? So, I mean, it's a fixed manipulated exchange rate. It doesn't bear any resemblance to reality. It's a PR stunt by the Kremlin. The fact is that Russia, is in default. Will remain in default for a very long time, and that will have devastating long-term consequences on Russia because it will not come out of default quickly.
Right.
It will not be like '98, where bondholders were able to negotiate with the Ministry of Finance to bring them out of default. Unless Putin gets out of Ukraine, there'll be no negotiations about coming out of default. So it means high borrowing costs, lack of foreign capital, lack of investment, low growth, low living standards, capital flight, and brain drain out of Russia for a decade. That is the reality.
Grim. Okay, we get that part. I want to ask you about something that's also grim, but I guess unrelated, or maybe not. In Sri Lanka, for weeks, we've seen civil unrest there, demonstrations, riots even, and now a default as well because they don't have enough dollars on hand to pay for food, fuel, and to service their debt. So they've stopped the latter. Is this related to the, war-caused inflation, or is this a problem that's been brewing in Sri Lanka for a long time anyway?
Oh, it's the latter. I mean, I think most investors are surprised that Sri Lankans lasted so long. I mean, they should have gone to the IMF two years ago, and they should have done a debt restructuring 2 years ago. This is about bad policy choices made over many years. Basically a fundamental lack of competitiveness, a public sector. They raise too little in taxes, they spend too much. I mean, the interest burden from public debt is 70% of tax receipts. That is not sustainable. So in a way, the crisis in Ukraine with higher food and energy prices is kind of the straw that broke the camel's back. But policymakers should have recognized the problem 2 years ago. There were solutions. It was a head in the sand kind of approach. The positive is that, they now recognize the problem. We have a new credible central bank governor. They are talking about going to the IMF, and they are talking about a debt restructuring that hopefully should give this country a better perspective going forward.
Okay, thanks so much, Tim. Thanks for joining us. Timothy Ash, Senior EM Sovereign Strategist at BlueBay Asset Management. Coming up, we will be talking to Professor of International Affairs at the New School, Nina Khrushcheva. That is at 8 a.m. in New York, 1 p.m. in London. Really interesting conversation to tune into, given her family connections. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are continuing to watch the Brooklyn shooting situation. Police have named a person of interest, Frank James. They've released a picture of him on Twitter. They haven't called him a suspect yet, but there is a manhunt underway here in New York, and I imagine in the surrounding area as well, for this person of interest, Frank James. Anna?
Yeah, a person of interest there. Back to the markets. We're focused on equity markets, a little bit weaker here in Europe, but from a macro policy perspective, interesting to watch the Bank of Canada. Will it become the first G7 country to hike by 50 basis points, by 0.5%, when they make their decision later today? This is Bloomberg.